Gimana start lah? Mhm. Okay, let's see. Okay, good evening, everyone. Thank you for joining us for our webinar today. We will be talking about from chips to chatbots. Basically, we want to try to map the global AI investment universe as we bring you guys go through some of the AI tech stacks that we have. If you're following our retail report, you will find that we actually have one report that we written on Monday as well. So the idea is really to let you guys know that AI is not just about a single company, but one entire stack of ecosystem, right? So there's a lot more opportunities from power, from data centers and chips, all the way to cloud, software, agents, and robotics. So today we will try to address some of these issues. I think it's quite timely given the volatility in the market. So if you do have any questions, just put your questions on the Q&A box and we will look at it at the end of the session, right? So I'll first bring through you guys on some of the AI tech stacks across the ecosystem and talk about some of the tactical as well as valuation before I pass the time to Viren to focus on a lot more of the strategy at this point, all right? But before we start, let's just go through the usual disclaimer. So this is basically not an investment advice for you guys, all right? If you want to make any investment decision based on this webinar, do talk to your financial advisors who understand your investment objective as well as your time horizon, okay? All right. Basically, I think the first thing, let's start with the market backdrop. I think the AI trade has been very volatile. I think it's been the key driver for some of the market rally that we have seen at the start of the year, but we have also seen a sharp sell-off on and off, and this week is one of those times that we've seen. And of course, the South Korea's Kospi plunged nearly 10% on Tuesday, and then rebounded by more than 4% at one point today, before moderating to a gain of around 3% at its closing, right? Now, the key takeaway from here is that the AI team is not that it's broken, right? But it's that this has become a bit more selective in terms of how we look at AI, right? So investors are still buying the dip, but they are probably becoming more selective and disciplined. So they are looking for companies with earnings, visibility, real demand, and exposure to the bottlenecks of the AI build. So before we talk about stocks, we will try to look at the structure of the AI opportunities first. Okay. So the main problem for most investors, especially those retail investors, I think is that most of the time you only see what's on the top of the iceberg, right? We saw the AI chatbots, saw ChatGPT, we saw Microsoft Copilot, we saw NVIDIA, we saw Micron, we saw the big names, but we do not really see the deeper AI stack, which is your power and energy, your data centers, your semiconductor equipment, your chips, your memory, your advanced packaging, your AI servers, and across the various different layers of it, right? So the most visible AI names might not be the winners given the crowded trades that we are looking into. So the core investment question is really where the AI money is flowing right now. I think a lot of the driver that we are seeing right now is really because of the huge amount of investment that the US and big techs are really investing into AI for growth in the longer term basis. Just to give a bit of context, the big four hyperscalers in US, for example, your Microsoft, Amazon, Meta, and Alphabet actually invested about close to will be investing about close to 700 billion for this year. Last year, they invested about 400 plus billion in AI itself, right? And to put into context, the Chinese is planning about close to 300 billion investment into AI over the next 5 years, right? So that's how much the money is going into building the AI ecosystem and infrastructure. So we will see that spending flow downward first. So you will benefiting those on your left-hand side. You can see the likes of those within the ecosystem, right? Monetization flows will be coming later on, where they're able to, whether they can prove that, monetization could actually be driving their revenue and margin higher going forward. So the likes of your cloud, your foundation models, your software, your AI agents. So you can see that at the start of the AI story, a lot of these players actually initially they rally, right? But actually there's a bit of slowdown in that sense, right? A lot of the infrastructure players have actually outperformed the seven, for example, those who are probably more on the hyperscalers section of it. So you can question is really not just who has the AI exposure. The question is who is really getting paid now and who will need to probably prove their ability to monetize later on. So here's probably what we will try to do today. We will try to answer 5 key questions. Basically, what is the AI tech stacks that we are looking into, where we are in the AI build-out phase, which countries dominate which AI layers, which AI stocks are expensive, reasonable or stretch, and of course, where should investors be focusing on tactically right now. So if you look at this slide here, you can see that basically we are saying that AI is not just a single stocks, it's a 10-layer ecosystem. So you can see the bottom to support those on top, right? The lower layers are basically your physical foundation, your power, your data centers at layer 1, then followed by semiconductor equipment, then your chips and memories, foundry and advanced packaging, so on and so forth, until your last layers, which is robotics and physical AI, right? So each layer actually depends on the layer below it. You can see that AI application is only possible because of the infrastructure that exists, right? So in order for them to monetize later on, to scale, they need to build up that ecosystem first. Now, a simple analogy is basically something like building a digital city, right? So power is your electricity, data centers are like your buildings, chips are your engines, networking is your roads, and then cloud platforms are basically like your landlords. And then the software is basically the shops and services that are provided in the city, right? Robotics is when city are able to move into a physical world, right? So in any city build out, right, the builders tend to get paid first, right? And then the businesses inside the city get paid eventually once the entire building or the ecosystem is set up. So that's a simple way for people to understand it. Now, there are 2 different AI layers. The first is basically the picks and shovels trades. I think the companies that are really selling into the hyperscalers capex, right? So these are the layers from 1 to 6 in general. So they are the ones that are probably going to benefit it right now because they're getting paid at this point of time. The second is basically the monetizer trade. So these companies need to convert AI usage into durable revenue and margins, right? The market is still rewarding the first layer at this point because we're still pretty much at the AI build-out phase, right? But the second layer will be very important because in order for AI growth story to be a sustainable one, the structural multi-year growth story that we're looking into, they need to be able to prove that they are able to scale on that front, right? So if you look at in recent news or in recent developments, you can see that a lot of companies are changing the business model as well. I'll address some of it later on as I talk about some of the companies into specifics, all right? So in AI, I think the bottlenecks right now becomes the profit pool. This is very important at this juncture because your demand is strong and supply is limited. So this is the key areas that are really gaining now because of the pricing powers that you have, the order visibility, and as well as investors' attention in general. So the key bottlenecks that we are looking at are your electricities, your grid connection, data centers construction, the HBM memory, advanced packaging, AI hype server power density, optical networking, and the hyperscaler capex capacity. So the best questions really to ask is where is demand, rather than asking where is the strong demand coming from, is where supply are more constrained at this juncture because demand at this juncture, if you look at the investment capex from these big hyperscalers as well as sovereign AI, not just in US, in Middle East as well, even in Singapore, for example, or even in Europe. So you can see that this is still the demand is generally going to be still there at this in the near term at least. All right. Slide shows you the AI stack in a single view. Hopefully this will help to summarize some of the complexity of things. So you can see, you can go through the entire stack later on your own. I think the main point of this is that each layer has a different role, right? And each of them have a different business model as well. So it's also important for us to know that we need to probably value each of them quite differently. So you cannot value, for example, NVIDIA the same way as you would value, say, Microsoft or TSMC, Micron, Dell, or Palantir. So hardware, semis, cloud, and software, they're all responding to very different key drivers. So we do need to look at it from a very, very different perspective when we evaluate each of these different companies in this the different layers that they are in. So I think where are we in the cycle? We will look at it at this point. So the AI cycle basically has 3 phases. First is basically building, secondly monetizing, and third automating it. So the first phase is really to build the AI factories. And then of course, the second phase is to monetize the intelligence through your cloud, software, and agents. And the third phase, of course, is to move AI into physical world through robotics and automation. Right now, we are still very much in phase 1 with early signs of phase 2. For phase 3, it's really the longer term frontier that we are looking into. So for phase 1, if you look at it, the beneficiary layers are some of these names. So you can see Givanova, Eaton, Verti, some of them are involved in the powers section. So for SML, for example, they actually dominate the entire lithography segment. So Applied Materials, Lam Research, NVIDIA. So these are basically the areas that are benefiting at this point on the portion. For the likes of Microsoft, the hyperscalers, they'll probably be the key players in terms of how they spend their investment. So it's very important to watch for the capex, whether they're going to maintain that capex level. So if you look, a lot of these companies are also tapping on the bond market. So there's a lot of concern in terms of whether the tech companies have that sort of scale ability to continue to build up this AI ecosystem. But if you look at the cash flow in terms of each of the big tech companies, and of course the interest that they are, the interest cost from their bond issuance, you can see that a lot of these are still sort of make sense because they're probably building it at a cost that allows them to tap on the growth in a longer term basis. Now, the second phase is really from compute to monetization. I think once AI factories are built, once it's available, the question becomes who can monetize this area, right? So this is where your cloud platforms are going to be very important. Microsoft, Amazon, Alphabet, Meta, all four of them will probably be one of the key. Now, one of the easiest way to look at it is probably look at Microsoft as one of the example because they are probably the best in terms of monetization from for B2B business. So if you look at Microsoft, one of the challenges is always this, right? How are you going to sell this proposal business? Because in the past, if you look at all the business model have shift towards a subscription model. So subscription model is on a fixed cost, on a fixed amount of money that you charge a client, right? So it's an easy sell. So you look at Netflix, they just charge a certain amount and they sell it to the client. Similarly with Microsoft Copilot or 365, you can see it's quite easy to sell. But looking at the cost, I think a lot of these companies are also rejigging their business model. So they are probably looking at to more tokenization. So costs are probably to be charged based on the tokens that are being utilized, being used, rather than just based on a fixed subscription model base, right? So we still are not sure whether this sort of monetization level could actually be more effective because it could also be harder to sell to clients because it's a bit more complex rather than a fixed amount of money that you're charging, right? So this is area that we will want to continue to monitor. So during the earnings seasons, it's good for us to look at it and see where it is, right? Because it's important for us to see whether this helps the companies to improve their margins and their revenue and their growth level. Okay, sorry. So for phase three, we are looking at probably 2030 and beyond. This is probably a longer term basis where AI move from digital intelligence into the physical world. So this is basically more on robotics. So you can see a lot of these names are not just NVIDIA, Tesla. For example, App Limited is a company based in Switzerland. Then you have Yaskawa, you have Intuitive Surgical, you have Funnel. So all of this, a lot of these are Japanese companies as well. In China, there are also a few names like Horizon Robotics, which I did not put in here. But at this juncture, a lot of these businesses are still not making money. So it's probably a longer term investment if you're looking into. So treat it as an optionality rather than a core tactical trade at this juncture. So where we are now, I think what we are is probably late phase one and early phase two because we've seen some companies trying to show proof of monetization. Of course, phase one, there's quite a fair bit of, if you look at the growth level in terms of earnings that have continued to prove, look at Micron, we will probably be seeing it tonight as well after the market close. So whether they can continue to deliver on that growth. So it's been very, very strong growth that they're coming in, right? You look at SKNX, you look at Samsung, it's all because of the pricing power that they have due to the strong demand. Of course, this sort of hyper growth that we are looking into is probably to moderate to a double digit rather than a strong triple digit at some of them recording now, but it's still going to be very solid growth. So we are really looking at a late phase one and probably early phase two. So if we are able to see more signals in terms of how companies can monetize from AI, then we are likely to see a rotation back into some of the companies that will be benefiting from that phase rather than just focusing on those within the build-out structure. So aside from that, I also wanted to show you guys this, right? So AI stack is also global. It's not just a single country. In fact, no single country controls the entire stack. So if you look at this slide here, you can see that US basically leads in GPUs, cloud model and software. But if you look at Taiwan, it's very critical for foundry and advanced packaging. South Korea dominates the memory level. Japan contributes equipment, materials, testing, and robotics. Europe has a power in terms of equipment and automation. It's also very important, like, for example, Netherlands that control the EUV lithography. China has a domestic AI cloud applications, robotic, and scale manufacturing. So if you look at it, China is very much more fragmented, it's more disconnected from the rest of the world in that extent, but they have a lot of their own local players. So it's very important to look at China from that lens. So if you look at the next slide, you can see here basically telling you some of the leading names in the US, and of course in Taiwan, South Korea, and Japan, which is probably the backbone of the manufacturing for AI at this juncture. And then Europe, China, Middle East, and ASEAN as well. These are what I call the other strategic AI hubs. I think it's very important, especially, for example, if you look at Middle East, if you see their sovereign capital funding continue to increase, that probably gives us another leg in terms of growth for the AI ecosystem. So why this matters, why this is important is because AI investing is also about investing in the supply chain, right? So if you look at it, a company might be listing in US or based in US. The supply chain really much depends on Taiwan, Korea, Japan, Netherlands, or even China. So there's a lot of risk that will have impact across the entire ecosystem. So if you look at Taiwan, could actually have a big risk of that affect the foundry and packaging, which is why you can see US is investing into Intel, which is probably seen as the alternative that they wanted to look at, mainly because Intel has exposure across the entire ecosystem of that chip building. So that's one advantage that they have, right? So if you look at Korea, if there's anything that were to impact in terms of the supply chain, it will impact on the memory supply. Japan will affect your equipment and materials, similarly with the rest. So basically, there's a lot of risks and opportunities across the global market. So why valuation suddenly become important now, right? I think it's probably because I think before talk about this, every time we talk about AI, I think it's not the first time you're seeing it. If you look at it at the start of the year, people have been talking about selling the US market as well and buying into Asia, ASEAN as example. But if you look at it now, US has actually done very, very well at year-to-date level, right? Driven mainly by all these AI big names. Similarly, if you look at Japan and South Korea, they've done very well because of this. So of course, there's but always that risk in terms of how risk gonna look like, because regardless of what we are looking at the end of the day, even if the story remains intact, valuation is very important, because if the expectations are too high, the market will actually take an opportunity to sell off in any news that are probably more negative to the ecosystem. Now, here's just a snapshot on the AI, the valuation of some of the companies that are leading in each of the layers. So you can take a look at it later on yourself. So the important point is that the valuation spread that we want to show, right? So some companies have strong AI exposure but are already trading at premium multiples. Others may have weaker momentum but are probably having a better valuation support or cash up opportunities. So what the valuation table is really saying is this, right? That different layers have a sort of deserve a different multiples, or at least from an investor's perspective, I'm probably not going to be willing to pay as much for companies that are in the software space at this juncture due to the uncertainty surrounding that, right? So hardware and services, for example, in general, they trend to trade at lower multiples because margins are thinner, right? Power and infrastructures can get better visibility, but it also depends on the capex cycle, right? If you look at the third one, semi-cap and chip, for example, so they usually deserve a higher multiple at this juncture when demand is very strong, but it's also very cyclical, right? So let me just go through back to this one. So if you look at a Micron, for example, right? If you look at let's look at the P. So if you look at the trading P, it's trading at around 49 times, right? But if you look at the forward P, it's trading at 16.7 times. So from a trading perspective, it's very expensive, but from a forward looking perspective, it's quite reasonable, right? It's quite decent. So the reason is because it's very cyclical, the business, right? When demand is strong, they have a lot of pricing power, so that tends to fluctuate quite a fair bit, right? So I will actually show you guys later on. And then, of course, if you look at networking, it's also usually deserve a high multiple. In general, software has a highest multiple, but of course, at this juncture, we are seeing a lot of that trading lower because of the uncertainty surrounding the capabilities of these companies to monetize. Now let's just go through a few examples. So if you look at Nvidia, for example, right, it's not just a GPU company. It's trading at currently it's trading at around 30 times PE and 25 times EV to EBITDA. These are trading numbers, by the way. So with exceptionally strong ROE and ROIC. So if you compare with some of the AI leader names today, valuation is probably more defensible because earnings powers is already more visible at this juncture, right? Because we've talked about Nvidia for quite a long time. So if you look at year to date, Nvidia has actually underperformed quite a fair bit of the numbers of companies. One of the reasons is because of the competitive alternative that they are. So the ASIC pressure. So ASIC is a customized chip that probably used a lot more in the inferencing phase, right? So at the start of AI, so there's a lot more training in terms of usage of GPU for the training of the large language model. Basically, that's to train the brain out, right? Now we are at the phase where we are inferencing. What it means is that a lot more usage of the AI, which is you getting the brain to work. So a lot of that can actually use ASIC chips, which is cheaper and more efficient as well. But of course, there's a downside to it, is that it's not as customizable as the GPU that Nvidia offers, right? So TSMC, we think that this is one area that has the highest or the biggest bottlenecks level, the foundry and the advanced packaging level. So this is one area that we think is worth watching into. I think because of some of the areas, especially on the geopolitical risk as well, capex guidance is another thing, and of course the ability for the company to grow their capacity per se, right? So we do think this is one key area to look into. Then of course, Broadcom and Mobile. I think I talked about ASIC chip earlier. So Broadcom is one of those that really benefit from that, which is why this year they've done very well, as there's a lot more attention going into that side. So multiple is actually even higher than Nvidia. So networking growth is also supporting that. For Marvell, they're basically focusing on the optical and custom silicon exposure. For Micron, I just want to highlight this earlier just now. I think it's important for us not to misread the PE level because it's a cyclical business. So it tends to be more cyclical in terms of their PE ratio as well. So if you look at it, it's quite distorted if you're just looking at a single point of time, right? So it's very important for us to look at probably more on a longer term basis in terms of its average as well as where the growth is going to be going forward, right? So the biggest question is this, right? How long will this cycle last, right? How long can that expenditure remain? So at this point, I think there's still a lot of shortage, so they're still building up that capacity. So the risk is really, I think there's a news on SK Hynix focusing on a lower, cheaper product. So that's actually drive a bit of a sell down in the market as well. So those are key areas for us to really look into, especially during the earnings seasons. Another example is your Dell versus Palante. Just wanted to show this in terms of why valuation is important and why we need to be able to differentiate it. So for example, Dell is trading at around 1.8 times EV to sales, while Palante is trading at 34.4 times, right? You can see a huge difference. One is basically with high expectations on the growth going forward, especially on the software trade. But another one is basically less on their hype but focusing a lot more on the current visibility that there is. So the real question is this, right? We are not trying to tell you to just look at a single P and then decide whether it's cheap or it's expensive, right? You wanted to look whether this company has that potential to grow into the multiples that they are trading at. Okay, some tactical strategy. I think at this point we talk about quite a fair bit. Like I mentioned, we do think that foundry and advanced packaging is probably the one with the highest connection of bottlenecks. Then of course, networking and optics is also the emerging bottlenecks to look out for. Power, cooling, electrical is also another areas. For the memory section, we do think that there are the momentum leaders. Of course, there's still bottlenecks in it, but we are a bit more concerned in terms of how the valuation will justify the growth going forward, right? So for selective core, we think that Microsoft or those in the hyperscalers can actually be quite defensive for investors who are looking to accumulate companies that have a longer term growth potential and a more stable sort of business model within their ecosystem. Those in the watch list is probably the longer term frontier, like your robotics or your physical AI. Those are likely to be to see much monetization at this stage, but probably more for future thematics. This is basically just a slide to showcase some of the companies that there is. So you can take a look at it. I think Vivian will also highlight some of these companies later on. This is the HBM and memory. I think I have anything to show here. All right. Okay, so in short, if you look at it, the tactical scorecard here, basically we are looking at both the momentum in terms of year to date as well as the target price potential return based on market consensus. If you look at it, the first one, for example, your memory, they have the strongest momentum, right? But a lot of the companies are already much priced in. So Samsung is probably the one that has still quite a fair bit on the upside. For foundry and packaging, Intel has that sort of momentum. I think over 1 year period is grown even more than 240%, right? But we think that TSMC or Samsung would probably be the core to tap into. But Intel is a high risk turnaround story that you can look at. Networking and optics, Marvell has done very, very well, 248%. I think Lumentum and Broadcom has that probably higher potential growth on an upside based on the target price that being set by consensus. Power cooling, electrical, we're looking at Delta. Delta Electronics has done very well. So I think some of the companies that have struggled right now is actually mainly due to their good performance prior to this. So I think we're going to highlight a bit more on the tactical front. So hopefully this is going to help you guys to plan your strategy ahead. I'm just going to pass the time to Viren so that we can have a bit more time for Q&A later on.
All right, sure. Thank you very much, Billy. So I think what caught me on what is sharing is on the valuation part. Like the header he was putting in slide is even if you got even if AI is running, but bad discipline, bad traits is likely to kill everything. All right, so it's like enter at the top or whatsoever. So if we look at it, I think a lot of people would like to say, how about SpaceX? All right, how is SpaceX doing? All right. So SpaceX debuted last Friday, 12th of June. And then it went up all the way, gauging around, opening price until all the way up until got almost 50% of growth. And then it slammed down, wipe out all the 50% growth. But you can see that actually what you can see is as everybody was like panic selling, oh, okay, means that if you enter at a high over here and then you sell, probably you will down 40%. All right. So, and then it take you out over here at this. So now the question is, do you still want to buy? Maybe you can. All right. So as a short from the strategy point of view, it's at a low, the risk to reward is low. How low can go? But I think I would like to look at 131. A bit of far-fetched, but I think worth looking at because I think going forward to next week, I think there's still a potential that SpaceX might likely go higher. All right, so I think SpaceX and Tesla. I think I did a courtesy of just now. How about Tesla? All right, so Tesla also did the same thing in June. 29th of June 2010. That was like 16 years ago. Oh yes. So Tesla went up and then it slammed down and then it took out the um take out the low and then it rebounded. You see how low it gets. So it goes around maybe from the low, it goes around maybe 17% downside, and then after that, for the next I think that was like July until November, around 10 months, no, around 4 or 5 months, you can see that it grew 117%. So would it happen to SpaceX? I think probably on this, all right? Maybe. All right, we shall see. All right, another thing that I want to point out, because I think I almost forgot to put in my slides, which later I will share, is actually my report on some of the AI team. So back in 2014 April.
Sorry, it's Wayden lag. It's lag on my end, so I'm not sure if it's me or if it's. Hello. Hello. Is it me? Hmm. Yeah, I think Wayden is lagging, so I think he disconnected. Let me just get him on board back. Wayden, you need to unmute first.
Sorry, I was sharing how do I share the link. So I post the link over here, but I
What's your-
couldn't send to the everyone. All right, so maybe Billy, you can help me to send out the report on the Bloom Energy and stuff like this. All right,
Fine.
so I will share my slides proper. All right, where's my slides? Okay, so preview and then zoom. Okay, sorry, just give me a moment. Wow. Okay. Okay, so let me see. Home slide. Wait, slideshow. Okay, so mega AI stocks, how are we going to look at it? So as usual, we got our disclaimer on this. But let's start off with the usual chip and semiconductor names. This is the one that in 2023 that caused Nvidia and a lot of mega stocks that run out all the way, and then subsequently Micron at the start of this year. All right. So, but unfortunately, I didn't write Micron. But I want to start off with Marvel. All right. Because why Marvel is the first one? Because BD highlighted it just now. We have a growth of 170%. And then we did this last year, October 2025, and that was somewhere around here. And then it ranged, and then it break up, and then bounce up. So right now, at this tipping point, we are actually at a very strong corrective phase. First up thing is the technical structure. You're looking at a potential double top. All right, you got a big sell down over here, and then but the thing is it stays supported above 253. So if you have seen this this gap over here, all right, is very well supported once, and then it went up. But you can see that this rising panel has been relatively weaker than usual. So I would be very wary of chasing buying any new high. So as a trader, what can you do? So perhaps maybe coming down first, fill up the gap. Not very great if you fill up the gap, but I think double top and then looking for a mega correction. Okay, I will say mega correction. I'll say a larger degree correction, and then before it went up to 375. All right, so looking at around $200, which is over here, this level. All right, okay. Okay, so I think next one, the famous Nvidia. So Nvidia, we did somewhere back in 7th of May, reach our first TP at 226 and went up higher, and then do a larger degree correction. All right, right now it's still supported above the $200 psychological level. Yesterday it gapped down, but I think tonight, maybe as the Nasdaq futures is showing some light rebound, I think it's likely to see a potential rebound and then touch and then base and then going down forward on this. All right, so there's $190. If this level breaks, then we are looking for 178. So the next thing is, should you add tonight on Nvidia? I would say if you have a lot of funds or anything, you can scale it at 1% of position. All right. No harms, right? But based on technical structure, you can see that Ichimoku is showing 2 out of 3 bearish crossover. I would probably want to buy around 190 or maybe 178 if I have limited funds. All right. Most important in like what BD shared in the first slide, I think we need to have a discipline. All right. We need to know best price. All right. On this. So I would rather hold my capital on Nvidia. I don't want, if Nvidia don't show the good setup, I won't touch. All right. I won't even make a call on that. All right. Okay. So if like this, okay. So in Nvidia, you can see that it has ranged bound for quite a while. All right. Not playing despite good earnings. You see that good earnings, it didn't go up. Good earnings, it didn't go up. And then after that, then it goes up finally. All right. But if you have missed it, I think you have missed the if you have to focus on Nvidia, you have missed AMD. All right. Why? Or Micron or Intel or maybe other stocks like your Qualcomm, all this. All right. Okay. So why do I say so? So in April this year, finally AMD broke out. So 15 June, we added one more position, but this one will be a risky because it's trading at a high. All right, so we will be very careful on this. All right, so it's a trading continuation of 26th of March. So we have every aim that because it was consolidation. All right, and then I think that AMD is well supported. Do have similar setup like Nvidia, but I think I was like thinking I think AMD is likely going to pick up more than Nvidia because Nvidia there's a lot of things going on that didn't garner the smart money to actually jump in on the trade. So the bad payoff it went up all the way. So till date, since 23rd of January 2026, we are up 107% as our current price. But if you compare to what we did for Nvidia, then Nvidia only I did once, and that's it. All right. So for Nvidia, I would say that the growth is only like maybe 30% compared to 100% of this for the past 6 months. All right. So even with the pullback or the bubble, rumors of bubble going on, we actually continue hold on long on good stock with strong fundamental and trend. So this beget any question. I think for technical analysis, I think I always promote this thing. I think it's only the valuation and the fundamental and the story itself combined together that move the market. Technical analysis, price action, and momentum only tells you that okay, this stock looking well, but you need to have the good fundamental as a solid background. It's like building a building. All right, you need to have a solid foundation at the bottom. All right. Okay, so the next thing part of the AI play, I think it has a great thing is the fiber optics. All right, so why fiber optics? And for this part of the section, I think I'm going to let you know that there's one stock that I have grew over 1,000% for the past 1.5 years. All right, it's a Hong Kong stock, but it's part of the slide. But you guys can make a guess on what is it. But I will share with you all later. All right. So we go through the what the US is. All right. Lumen Tech. So Lumen Tech, also part of the fiber optics play. You can see that it grew up. I think 10 April. I think before 10 April, we have one in October as well. All right. So goes up and then goes up to $11 and then it came down as well. So I think we are likely to see one more downside play to around like $7. So it's around this level, $7, or maybe lower at around $6 region over here. All right. So if we do that, we are able to do that. If price is able to hold at this level, then we might look at the downside. Right now, I don't recommend adding because Ichimoku showing a change in trend. So price might hit lower to do some reaccumulation at a lower price at a discount, and then before rebounding to a higher. But despite all this, I think longer term uptrend based on the weekly chart, we are still eyeing $14.20 and $22 on this. All right, next one, Lumentum. Light technology. So light is one of my best pick for now. I think we have since I think October onwards, we have grew around 80%. All right. And then very strong upside, but recently a consolidation happens. Um, this is like what we are eyeing on Nvidia itself. All right. So I would say that I would want to buy over here at lower price and a rebound, or maybe a lower price over here at $600 going forward on Lumentum. All right. So if until now, I think what BD also I mentioned, think that the AI stocks that we have looking at the topic, so it's very hard. And then with June as a momentum correction, everything is going to defensive, and then rebound weak in the Nasdaq futures right now. So we think that either you hold cash or you wait until July, maybe start of July. You see, is there any favorable signal or end of July? All right, or mid of July. Sorry. All right, Sienna Corp, my favorite, gained us 50% up, and then before, this is a stock that I won't recommend to add at the moment because, why do I say so? Because if you look at that, this is a downside, and then after that, gap down. This is a bearish exhaustion gap. All right, and then price may actually test this lower band of this gap zone, but I don't think it will fill the gap. I think it will just break here. I think it just come here and then it just come down over here. So making it a three-wave correction before rebounding to a higher level. So this one, keep it on watch list, and then we'll see how it's going to go for the uh for Sienna Corp. Nokia. All right. So Nokia is one of the strong one. I think Nokia was trading high. Well, it was like back in 9th of April, which is here. This level over here, thing could see is over here. All right, before it went up all the way to $17 and then before come correcting. So right now we do see a small double bottom and a neckline resistance. So it might break and there's tested here, form a three-wave correction down to maybe around $11.26 before rebounding to a high ground. All right, so I would not chase the high. Why? Is because I think if you look at how this there's a sharp V-shaped top, and then we're likely to see reversal ongoing. But the reversal should be strong, should be mild corrective. All right. So another thing I want to say is like correction. All right. So correction happens in the market because market don't move in straight line. It move up, wave down, wave up, wave down. In a very three-way or five-way kind of structure. Pardon me. All right. So, but when it's a correction, it's quite happy for me because I would like to add on at a lower level, lower risk on this as well. Okay. So, this one I will just keep on. Actually, if you are a TR, you are a client, I think I posted a update on our client on our TRs to our internal sales that say I highlight the fact that the fiber optics play is likely to be topish. So it's time to trim and then maybe wait for a correction down to buy on a support or something. All right. So don't chase. I'm not a fan of chasing. I'm not a fan of like, you must chase. All right. Don't chase. Like it's like what happened in SpaceX. You chase at the top after 3 days, then it came crashing down. All right. Okay, so this is the stock that I have been wanting to talk. I since up in 2025, I have been looking at this. So 2025 was somewhere around here, and then before it went up on 1,077%. That time I was trading around $20 per share. All right, so near-term weakness, but I think also our recent report toward 2nd of March is over here. We have reached and then coming down. So yesterday was a pump and then followed by Monday was a pump, 20% growth and then came down. But I think let's likely go until $200 or $160 as the next level to watch out for going forward. All right. Okay, so next one. Technological hardware. So technological hardware very straightforward. I think I only have two of them. Because I think I forgot to add one more. It's called IBM. All right. So if you look at technological hardware, I think Dell, I think Billy did a very fantastic comparison side by side on the valuation between Dell and between Palantir. And Palantir was trading at very extreme valuation, price to sales, if I'm not wrong. And then Dell was like super low. Nobody look at it, but you see Dell actually grew so much that it actually went up very high. So we could see that for Dell, can see a straight up. One thing Dell did great is despite some correction was rather mild, normal, and then upside is kind of like weak as well. But we didn't see that. I think there's one more push to the upside again. All right, so if this one can support over here, close above $400 level, then I think we are likely to see one more push to the upside for Dell. So Dell, I'm quite positive on this. All right, so yeah, let's look at another one that I think Dell, HP, IBM, they have all these in common. Your company laptops, they all provided. So some of them use HP, some of them use Dell, and then your ThinkPad, which was previously by IBM, but IBM have moved out, sold the thing all to Lenovo, and Lenovo did well. So I have a transporter pick on Lenovo as well. So I can find for you if you are interested, and then if time permits, I will go through Lenovo as well. All right, but pardon my typo, his HPE, and then it went up, close up $60, and then it came down. But as compared to Dell, I think this strong bearish bar after a gap up and then it came out, fill the gap. So this one wasn't a good trade. So despite some like this, I think it's going to come down like this from a 1, 2, and 3 pattern on this. So I won't be so hard up on HPE, but if HPE go do 25 or 39, I would look for a bullish reverse signal and then goes up to higher. So I think target price will be at $72 in the long run. All right, software. So I think Google, Alphabet, I think Google was quite performing. For AI stock, I think Gemini was good. I think some of the features it has. I mean, if you're a financial guy, finance bro, you will use Claude most of the time. But I think Gemini is good. I think it's very robust. I think Gemini was, if I'm not wrong, Gemini was the one. I think many years ago. I think more than a decade or maybe way before it started on the research on the artificial intelligence. And then there's rumor they shut down because of uh, things was like so. I think. But right now, I think that we might look for boost to the upside. So before it come down. So floor support, there's a lot of room to play. So be careful with Google. Don't play any option with it. I think if you want, I think just take on with the class A shares of Google as well. So it been included into the Dow, top 30 Dow Jones Industrial Average, and then likely to rub shoulder with Amazon and Microsoft. Means that every time any stock that included in Dow Jones Industrial Average is likely to face some pressure and correction. So if it goes down, I think it will be like Amazon, goes down all the way below 200 and then it rally up to the upside again. All right. Okay, Snowflake. I this one is a bit special because I show the weekly chart of Snowflake. So you can see that there's a cumulative phase, go down, and then after that it went up. So Snowflake actually reached our second TP. We have a growth of 63% on based on 20th of May. So it's a very short term. All right. So after that, but I think long term wise, I think we could go on $370, $400. Overall, we think that $400 is achievable. Why? Is because from the technical perspective, we look at it, I think is the whole accumulative phase is over here. And then V-shaped rebound, rounding bottom, you see every time rebound, it goes up, test, and then this whole level is actually being tested very much strongly on this. All right. Okay, so I think that's all for my sharing. So I shall look at the Q&A and then see if there's anything that's on this. So I think there's some question. Maybe perhaps before I pass the time to BB on the ZX AI on Bursa, I will take the SoFi stock on this. So just give me a moment. I reshare my okay, reshare, and then I go into my okay. So. Where's my webpage? No, okay.
Maybe the SoFi Tech maybe focus a bit on the longer term because the question is asking on 5 years though.
Okay, sure, no problem. SoFi. Okay, let me see how SoFi is, and then let me share my screen. Okay. Can see that SoFi, okay, if you look at 5 years, I think is down. All right, definitely on the downtrend. And you can see that there is uh okay, sorry. Every time we have this. So, okay, give me a moment. Okay, down very strong downtrend, and then after that is consolidate at the key support level over here. That you see over here as well. So you can see that it break up above and then came down. So I'm looking for accumulation. So I think if you want, you could scale it and then maybe look at a first leg up. I think if it breaks this level around $19.34, it might goes up to $24 and $25.27. So it means that we could potentially have a 43% gain. All right, so that is it. But if this fire a bit far-fetched, so but you like to say, I think we are in the midst of uptrend. So this downside could be the first corrective wave A, and then if this 25.27 cents don't clear, or even it don't clear above $27.67, then it might go down lower to $8.64. So 5 years, I really cannot tell you, but I think maybe a year. I think that if I can let you know is if it close above, then we could see a break to the upside and test this level. All right, so that's what I'm promulgating on. All right, hope that answers your question.
Thanks, Ryan. Just
All right.
add, I think SoFi is an attractive as a growth fintech compounder, but it is not a low risk investment. Let's just put it this way because of the volatility of the stock price, as you can see. I think it's constructive, but it's high risk. So in the longer term, we probably need to look at whether they can continue to sustain the sort of growth that they've been driving so far. So for now, they're quite small. So the numbers of growth is rather easier to achieve in terms of double digits. So it will be a bit different when they become bigger. So yeah. On Zetrix AI on Busa, we don't really do a coverage on that, but it used to be my AG. So I think it's a company that's really on an intersection of a few several high growth teams. So I guess national digitalization in Malaysia is one thing, blockchain infrastructures and AI. So those are three key areas. I think the earnings wise is pretty decent. So the strong earnings, some of the strategic partnership that they have, as well as I think they have an ambition on a Nasdaq listing as well. So that shows a company that's really aggressive pursuing for growth and sort of international recognition. But I guess the historical context, there might be a bit of concerns in terms of execution risk, especially with the global expansion and all this competitive and regulatory landscape involving blockchain and AI. So if you look at the share price, you can also see that there's a lot of signs of volatility and cyclical trading patterns. So I guess the future trajectory will really depends on whether they can monetize its blockchain platform globally and whether it can launch and scale its AI products. So I think at this juncture, we don't really have a comment on it because we didn't cover it. And it's also quite depends on a lot of the execution risk that is involved. I hope that answered your questions. Okay. I just wanted to address some of the things. I think earlier, Viren talked about SpaceX. So I think there is this question that we have received quite a fair bit. I think it's on how the IPO of SpaceX as well as the potential listing of Anthropic and OpenAI and how that will actually affect the market. So I think it's something that is quite new to us in the sense that I don't think we've seen so many big listing in such a short period of time for a long time. And of course, that will have an impact on probably the liquidity. So that's really where the concern is in terms of how that. So far, I think from the listing of SpaceX, we do see that the market is able to absorb that sort of liquidity concern. I think that's not too much of a risk on that front at this point. But I think because a lot of these companies are also loss making per se at this juncture, they're not really profitable at the moment. And a lot of the business is really based on some form of subsidy to drive that growth that we are seeing. So that part is really still a concern on the front. So how if let's say these companies were to be involved or be part of the index, right? There will be a concern in terms of how that will actually affect the market. Let's say it will trigger a sort of panic in the market as well, right? So I think there's also a bit of concern on I think overall AI space. I think we've seen this week we've seen the downside of the market, especially in South Korea. Viren, do you have any technicals or any support level that you can share in terms
Yeah,
of
no problem.
just wanted
Yeah, yes, I want to share about Korea a bit. I think
so
I think Korea, the Kospi actually came down quite a lot. So if you compare, I think in February this year it really came down and then range bound and then people say, I think Korean market is gone. And then after that, look, it went up all the way high. All right, so part of all this, I think yesterday it dropped around 10%, negative 9.99. All right, I'll just round it off 10%. I think there's some short covering. So I think monetary wise, I think it's going to have a short term rebound, goes up to around 8,000 and then come down. All right, eventually this is my personal opinion. Okay. Disclaimer, personal opinion. I think the South Koreans, they are likely to push to 10,000. All right, maybe short of 9,008, and then after that, a big correction is likely to come down again. All right, so far, if we look at the long-term momentum, is still maintaining. It's just that overbought is in, divergence is in. All right, so yeah, we do see some there. But do I recommend you all to chase this rising? No, I would want to wait for a clearer signal, like maybe until 7,008, and then before going to the upside. All right, same thing. SK Hynix. I do have a report on SK Hynix on this as well. So SK Hynix, I did this maybe in 10th of June, and then it went up all the way high you have a account with us, you can go to research portal and then search for it. If not, you can drop me an email. I'll be glad, or Billy, I think both of us will be glad to send our report to you guys for a reading pleasure. All right, so for SKNX, it dropped and then it came down, but look at this support, but I think that 2,285 likely to be the level. All right, so I think the South Korean market is like this, and then you see the Nikkei 225. Like I mean, Tokyo Electron, I think Billy was mentioned about Japan is about this. So we have really reached a 1:1 target. So a correction over here, I'm not surprised, but it closed about the 9 period conversion line. So I think maybe tomorrow HR higher, but don't mistake them for a wave up. So it could go all the way up to 1.236 and bam, a bull trap and then come down again. So you want to chase with uh cautious. All right. Okay, so I lost my train of thought. There's something I want to share on the market itself. So yeah, but maybe you are thinking about, I'll pass my time back to Billy. All right, Billy, to you, if you want to say something.
Jump in back. I just want to highlight this, I think, regarding the Korean market, investors take note of this. So you can see the sharp decline in the price, mainly due to if you look at it, Korean market, the upside has really very much driven by the local institution funds as well as the retail investors within South Korea market, and a lot of that is due to leverage trades, especially from the retail investors. So when there's an unwinding in terms of the trade, so sometimes that decline will be quite amplified in the short term, in the near term, at least that's what we have seen on the market. But a few positive things about this is this, right? Because the South Korean market is classified under emerging market. So some of the funds that are investing only in developed markets cannot really invest into the Korean market yet at this point of time. So a lot of institution investors are actually not in the Korean market at this point. So if let's say there's an up rating for the Korean market, especially on the currency issues to a developed market, we will see a huge flow from in foreign institutions to go into South Korean market, which is why we think there is a certain base in terms of the level that is protecting the market. So that's, I just wanted to highlight that so that investors are a bit more clear in terms of why we are seeing that sort of volatility. Vera, I think there's a question on MD. Do you want to highlight the technical first?
Sure. I think the AMD, I think something wrong with my Zoom again. So let me just share my slides on AMD just now. I think because AMD was part of my behind my this. So AMD, I think right now it's at a topish. So you can see that there's a momentary bearish divergence, which I forgot to highlight just now. So I did mention that I would prefer to actually buy over here on this level and maybe at $350 level. All right. So but I think pullback is a good chance to add. But overall, I do agree with what Fabian is sharing. Um, I think AMD is a good stock. Pardon me, I don't really understand the thing that you mentioned. Perhaps maybe Billy will know on this on this as well. All right. So I think AMD long term upside is done, but I think should you buy immediately in June? I will say no for now. All right. Thank you.
I think from a growth
Yeah.
perspective, it makes sense. I think what you're saying is that it's really there. But I guess the issues is, I think we mentioned earlier, sometimes you don't chase the high. I'm just gonna give an example. I think, let me just open back my slide for you guys to see so that you have a sense of what I'm talking about. Give me a sec. I need to find that. Okay. Okay, wait, yeah. Okay. So if you look at so for example, if you look at Constellation Energy, actually this one didn't say how much it dropped this year. Let me see if there's another one. Yeah, so Constellation Energy, this is basically the nuclear power that we're looking into. So if you look at it, down by 25% year to date. But if you look on it on a 5-year basis, it's actually gone up a lot. So I guess sometimes the problem is really where we are buying into the market, right? What level we are. So if you look at MD, I think valuation wise is pretty much priced in, a lot of the positive upside to it. So I guess it's probably at a fair value. I wouldn't say it's too expensive, I think, given the growth that there is. But I guess if you are looking at technical opportunities, I wouldn't think this is the time to jump into lah, right? So that's where we are coming from. Hope that answered the question. I think there's one question on some of the stocks to focus on, right? correct?
Yes, there is. So,
So you want
right
to show
now,
it,
uh,
Varian?
yeah, sure. I'll briefly say, what's the stock to focus on. I think mostly, uh, AI is still the focus. Technical wise, like what I share my slide, it is. But I would say is that that wait for a correction now. All right. But if you want to have a short term one, I think you can go into defensive stocks like utilities. Perhaps the one that's closest to AI related will be your nuclear energy, like your Oklo, your SMR, all this, because trading at a low. But you must know that they are utilities based. They are very subjective to a lot of changes, regulation. I think Billy shared this before. So short term play, maybe you can, but you must know that there's a lot of risk on this. So focus on yeah, that's pretty much. But bigger picture, I still focus on AI, but technical wise and what Billy shared at the start was like be disciplined and then wait for a pullback and clear signal and then go in. Don't FOMO, don't rush in. Don't make the mistake like what a lot of people did for SpaceX. That's what I believe.
So for it depends on where you're looking at. If you're looking at slightly longer term, I think near term is very hard to project within 1 week or 2 weeks of period time frame is a bit hard for us to s- tell you whether it's going up or going down. But what we can say is this really looking into, I think at the start of the session that we've been sharing, the biggest bottlenecks that we're really seeing is on the foundry and the advanced packaging level. So if you look at, it's a lot of reliance on TSMC alone at this juncture. Samsung can step in, but the 2 nanometer tech is really much dominated by TSMC alone. So bear in mind, TSMC also have to serve clients like Apple. So there's always that concern, how this will affect the entire, whether the supply of it. So the pricing power will definitely change on that front, which is why you see Intel
Mm.
is really trying to boost or sort of scale their manufacturing in the foundry a portion to sort of
Yes.
out this demand. But it's still too early for Intel because it's a new business for them per se. So they can't really meet the entire demand entirely on their own immediately. So it will take a bit of time for that to happen. So that's one key areas to look at. I think another areas is really networking. That's also another key areas in the mid to long term basis. We will see a lot more interest in that section. We believe that there will be a lot more on that front as AI continue to mature, become more important. That area will also be require a lot more supplies, a lot more demand from there, right? So that's also another areas. I think the third one will probably be your power, your utilities. So those are the key areas that you want to look at, right? Whether it's involved in cooling, whether it's in terms of providing that energy to do it. So because without all this thing, your AI ecosystem cannot mature, cannot grow anyway. All right, so that's where we are really looking into. If you want to know the specific stock names, we do have it in our report, so you can actually go through that and take a look at it and to see what fits into your risk appetite. So in terms of Inari, I think it's a good semiconductor cycle recovery play. I've been following Inari quite a fair bit before this, but I think it's not necessarily the highest conviction for AI stock in the region, lah. So I think it's basically a lot more OSAT play. I think that's across the ASEAN market. That's basically probably known for its long-standing relationship with, like Broadcom. So focusing a lot more on the IF chip packaging and testing for smartphones. But having said that, I think that I haven't been following the price for quite a while, so I'm not sure where the value is at this point. Maybe if Vira want to highlight some of the technicals, he can. But I think the company management has so far been showing. I think from what I understand or from what I've been following, they've been quite consistent in terms of the message. So I think it's a matter of delivery, a matter of it's like I said, some of these businesses are just cyclical in nature, so you will see a bit of slowdown for quite a fair bit. I think we do see that recovery play right now. We are seeing that cycle. So that's something to watch out for. Varian, maybe you just highlight the technicals on here.
Let me see. Just going to pull out the Inari chart. Just give me a moment. To be honest, I don't really follow it, the Malaysia market that much. So, okay, so sorry, it's loading right now. So just a moment.
And okay, I just want to look at the
Just
chart anyway. Let's see the.
okay. Maybe I think Inari. Sorry, just give me a second. TradingView always got this issue when I always do Zoom
Is it?
every time. Yeah, 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 every time I do a pairing and something I need to fiber optics. Yeah, Inari. Yeah, the Dow. Okay, so yeah, I remember. Okay, before I go to Nari, I remember I want to share next step future. So it came down and there's some buying pressure over here, but US market is going to open in maybe around 25 more minutes. So maybe it goes up and then come down. Do not know, but I think yesterday, I think some of you joined us for our webinar yesterday on the CFD educational webinar. I think we shared that there may be a larger correction. Because there's some key reasons that we didn't pass. All right. So yeah. Okay. So let me see. Inari. Okay. So Inari, you can look at that. I think Uh, this pattern I really like. I mean, technical wise, I mean, you don't tell me what is Inari, what is this, I would say, okay, look great. You got a push up, bullish flag, close above 26 period baseline, all this. But whether you will break up to 280, that's a bigger than a question. So we need to see how's the longer term trend. If you look at the longer term trend, I think from the start of I think look at here from the start at around 9 July 2024, the Dow trend has been over. So why do I say so? It broke up and then we test this key support at 212 and then it rebounded higher. But the key resistance over here at 262 will be you need to be cleared to confirm the upside. But I think based on the daily chart, I think likely to see upside going forward on this. So just take note on this before we don't. I think you can scale in, all right, or wait for a pullback around maybe a $162. Then you go it. So I always like pullback. Why? Is because my short term thing is down. All right. So yeah. Okay. Hope
Okay.
that answered your question.
I think that's more or less about it. I just want to close with this. I think it's important for us to look at where the key drivers are for investors to really see for some signals. I think the key signals is really in the capex spending of the hyperscalers AI. So I think earlier I talked about how they were going to spend about 700 billion in 2026 from 410 billion in 2025. This is just four big hyperscalers in US, right? They are also expected to spend about 5.3 trillion in capex from 2025 up to 2030. Sorry, so that's an increase of an earlier estimate of about 4.5 trillion. This is just the hyperscalers, yeah. Then if you look at global projects, the sovereign funds in 2025, there's estimate about 66 billion in 2025 alone, probably led by the Middle East section. There's also some partnership that the Middle East has with the various likes of AWS, Google Hub, Oracle, and Microsoft. I think that close to about 40 to 70 billion. Stargate US Core they're expecting to spend about 500 billion over the next 4 years. Right. My point is this, right? The amount of money that these are spending is going to flow through the AI ecosystem itself, right? So each of the layer will actually benefit from it depending on where the bottlenecks are. Because when you're building up this ecosystem, they will definitely need to invest in some of whether it is on your chips, whether it is on your power, whether it's on your grid, whether it's on your technology advancement, whether it's on foundry. So they'll definitely need to put a lot of money onto this, and it will benefit and it will flow over to various different players. All right. So we hope this session has been insightful to you. And if you want, you can read through our reports. And if you have any questions, feel free to just write in for us. I think there's a last question. Sorry, I don't think we have one on Bursa at this point. We have not done that yet. We will work with our local research team in Malaysia and come up with something for you guys, maybe. All right. Thanks for the interest. Appreciate it. It's anything, just feel free to write into us. Thank you. Oh, sorry. Viren, your slide can be shared, right?
Can be checked, but I'll need to do some changes because I need to update some, and then
Yeah,
I'll send it out to by tomorrow, maybe tomorrow afternoon, evening.
because there's a question on the front. Right. So we will send our
Yes,
deck
sure.
all the attendance. And if you miss any of this session, we also upload it on our YouTube session, so you can actually look at it from our YouTube. All right. Thank you, everyone. Bye. Good night.
Okay, peace. Good night. Thanks for everyone.